Hey everyone, Couch Investor here with another video for you today. In today's video, I'm going to talk about the top 5 stocks for the month of September. Obviously, some of those stocks like Fastly and Pinterest I've already covered on this channel. So if you want to watch those videos, they're always going to pop up in the top right corner. So in this video, I'm just going to talk a bit about those companies, what's been happening in the last couple of days, go over their graphs, and then obviously at the end of this video have my own conclusion on each and every one of those stocks. But before I get into this video, if you haven't subscribed yet to this channel, we're on our way to 4,000 subscribers. So if you want to help me reach that goal, please hit that subscribe button. And if you like this channel and if you like these videos, please leave an early thumbs up, as it really helps me outgrow the channel and get my videos out there. So without further ado, let's dive into this. Alright, so number one is going to be a quick one, is Pinterest. Obviously, I've been covering Pinterest for the last couple of months. First time I covered Pinterest, I think we were at around $18, $19 or so. Since then, the stock has risen almost to $40. Then we've seen the stock go back down like every other stock this week. But for the longer term, Pinterest still remains a very long position for me. I do not tend to sell. Let's go and look at the graphs. But before I do that, Pinterest has paid almost $90 million to cancel a lease for their new offices in San Francisco. What that will mean is that Pinterest is looking to move in a more work from home, work from different types of countries, get more people from all around the world to work for Pinterest and not be maybe locked in that same office space in San Francisco. That means that maybe they could recruit talents for all over the world and not make them move to the United States to do that. I think it's a great move and a big move for them and a big move towards the future to get maybe more and excellent talent to help that company grow and grow more and more. Now let's go and look at the graphs. Right, so for Pinterest, we can see here from the last time earnings came out, huge gap upwards of I think over 20% or so. Then the stock went a bit sideways, tested the $32 mark a little bit. Then we went all the way up to $40. And as we know, the last couple of days were all red. One day after the other, the stock went back down. I think $32 or so, right around here, 32.5, let's say, is a good support line right now. If that breaks, well, it can go all the way down below $30. I highly doubt this will happen, but if it will, well, you'll get Pinterest on a very, very cheap price, because as of now, Pinterest is growing. I think it's at only $20 billion market cap right now with, I think, over 400 million users, and it's growing at a pace of 40%. So I'm not selling at all. If it goes back under $30, I will for sure add to my position. And next up, another stock I've covered not so long ago is Fastly. I covered Fastly just after the earnings report when the stock went down very much because of their reported 12% of earnings comes from TikTok. And we all know TikTok might be banned in the next couple of weeks. Whether or not that will happen, I don't know. But eventually, that shouldn't really matter if you're a long-term investor. That opened a big opportunity for me and maybe some of you to buy into Fastly and get it cheaper. I said I will be selling Fastly back when it's at its all-time highs at $115. I've actually added a bit more, I think Friday or so at $75, because I thought, well, now it's just following the market's trend. Nothing has really changed with the company. It's still growing. It still has a great product. So I just added a little bit to my position. I will be trimming my position when it reaches that $115, $110 mark to invest it in Tesla or maybe Square. Let's see which stock doesn't rise as fast as the others, but overall I'm still very bullish on Fastly. If you don't know what Fastly is, you will have to go watch my video, which will pop up in the top right corner right here, but after you watch this video. So let's go and look at the graphs right now. All right, so for Fastly, same thing here. The last couple of days were all red, so went all the way back down to that same spot we were right after that earnings report, where we saw that majority, 12% of the revenue came from TikTok. And if TikTok gets banned, well, maybe that 12% of revenue will suddenly disappear. Obviously, right now, I don't think that's going to happen. And even if it does, it's only 12%. Fastly is still going to grow much bigger than it is right now. And that 12% revenue will get replaced by another customer or various customers. But let's just look at this graph right now. I picked it up right around $80. I have an average of $80, so I'm pretty fine with that. I do not think the stock will go lower than $70 or so. But overall, I'm pretty happy. Obviously, if you bought here at the low point and sold at the short-term top, great trade. Right now, I'm looking for a rebound of this base right here. If we can go back to this $100, $110 mark, I will start trimming my position and maybe keep a little bit on the side just to see where this stock is going. Obviously, this stock is going places. For the long term, this stock is a very good stock to have. We're gonna see how everything evolves in the next couple of days. Obviously, Monday, the market is closed, so we'll see it on Tuesday. Next up, we have Docusign, one of my favorite stock I did not invest in. Well, you cannot invest in every company, but this one really hits hard for me because I actually used Docusign last year. I've looked at this stock last year when it was at $50, $60, $70 or so. I actually looked at it even this year when it was at $100, but obviously I did not invest in that stock. Do I regret it? Yes, but we move forward. We learn from our mistakes. So if you don't know what Docusign is, it's basically a company that will help you or your company digitalize everything that has to be done with paperwork, contracts, digital contracts, leases, etc. Digital signatures, everything will be done on the Docusign platform. They actually have this resemblance of the Adobe Creative Cloud for all of your documents that will be created on the digital cloud. They actually have now over 70% of the digital signature market. So Adobe e-signature is actually competing with Docusign, but again, there's a huge opportunity for Docusign. This stock had solid earnings, but again, the stock price went down. Overall, for the longer term, I think this is a must-have in your portfolio if you're interested in all of those cloud revolutionizing companies. Docusign is one of those. I will be looking for a position at around $200 if that ever happens. If not, I will have to live with that. But let's go and look at the graphs right now. Right, so as for Docusign, they have reported earnings which weren't that bad at all. You can see here billings grew 61% year over year to $406 million during the quarter, while revenue increased 45% to $342 million. The company added more than 88,000 new customers during that period. In fact, Docusign acquired more new customers in the first half of this year than all of last year. The company is making solid progress in terms of profitability too. Adjusted operating income reached 10% of revenue last quarter, and both operating cash flow and free cash flows reached record levels during the period. Rapid revenue growth in combination with expanding profit margin could provide a double boost to earnings growth in the years ahead. But even after solid earnings, which weren't good enough for the market, the stock price went down, I think, 25%, almost 30% in the last couple of days, because if you look at the big picture right here, the stock went on a rampage in the last couple of months. So yes, the stock is pretty expensive right now, but looking at it for the longer term, I think every dip of 25 to 30% is very good if you're investing in the company for the long term. But right now, be prepared for the stock to go even lower, because as we can see here, for the last 3 days, the selling volume were pretty high, as that's why I've put here a buying zone between $188 and $205, which could be reached. You never know if the market continues its sell-off. We could see maybe a Docusign at sub $200. So maybe I will try and pick it up sub $200. That would be great, because right now earnings were great, but the stock is still very expensive because, well, you look at it, what it's done this year, pretty expensive if you ask me, but for the longer term, great company to have in your portfolio. All right, so next up we have Crowdstrike. Some of you have been asking me what I think about it, so here it is. Crowdstrike is basically this next generation of antivirus based on the cloud. Obviously, everything here now is going to be based on the cloud. It's a cybersecurity technology which provides security on the endpoint aspect of the whole network. Basically what it does, it uses machine learning to actually prevent cyber attacks to happen. So if it works correctly, it will tell you before an attack occurs that somebody has tried to breach your network, your computer, PC, phone, etc. We've seen some breaches recently on Twitter with famous accounts like with Obama and Elon Musk trying to sell you some Bitcoin, send you some Bitcoin, etc. So this is what CrowdStrike is trying to prevent with their cybersecurity technology. They have recently had their earnings, which were great, but then again, the stock market went down, so it went down with the stock market. Now let's go and look at the graphs real quick. All right, so CrowdStrike, another one of those victims of the recent market downfall in the last couple of days. Obviously, the stock was trading well above $150. It went down to almost, well, $115 mark or so, which was here a previous resistance point at $119, $118. Even a bit lower, 115 as well. Then it broke through, and well, intraday trading, we closed above that, which is a good sign. But again, in the next couple of days, the stock might test it again if the market opened in the red. But talking about their earnings, for example, they reported $199 million in revenue. That's an 84% year-over-year growth versus $188 million, which was the consensus. So a 6% beat on that front. Subs revenue grew 89%, growing 89% from last quarter. There was a 124% net retention. Guidance for next quarter was $213 million versus 196, which was the consensus. So again, a 9% raise. So again, here for the longer term, if you can pick it up again at those $115 mark, let's say, for the longer term, you got this stock cheaper than you might have expected, because when the stock was rising at $150, I don't think a lot of people were thinking, oh, after earnings, the stock will go back down to $115. But again, even after solid earnings, when those stocks, which are the cloud stocks, let's say, are following each other, that's what's going to happen. And that brings great opportunities for long-term investors. All right, and next up we have Datadog. This cute looking dog logo right here is one of my favorite logos out there. So what does Datadog actually do in very short? Datadog is a monitoring service for cloud scale application, providing monitoring of servers, databases, tools, and services through a software as a service based data analytical platform. Now, some of their customers you might be familiar with, such as eBay, Slack, Airbnb, PagerDuty, and many more. Nowadays, huge companies out there have so many tools that they are using, so many data points that they need to analyze, and this is where Datadog is coming in. They're helping them monitor and maybe visualize everything that is going on with the company, on the network, etc. Same thing here, cloud-based company that has been going up a lot this year, but in the last couple of days, like every other company, it's been going down. So if you're interested in that, we're going to look at the graphs right now and see where you can maybe open a position at a fair price. All right, so as for Datadog, same thing happened here. It actually respected the support line, came close to that support line at $74, $75 or so, which was a previous resistance right here. All-time highs were close to $100, but again, it followed the market in the last couple of days, so it went down. And if you want to pick it up, obviously it's cheaper right now than it was a couple of weeks ago. But then again, I think earnings weren't as good as people expected them to be. That's why you've seen this gap right here. But this gap was filled pretty quickly. Again, not all gaps get filled like this one right here. But overall, Datadog, again, is one of those leaders in their own segment in the industry. I think in the long term, you cannot go wrong with Datadog, but I would suggest to wait a bit what happens in the next couple of days. If you can pick it up at those $75 mark, that's a good entry if you ask me. If it goes back lower, I think we could see maybe $70 or so. All right, so if you want me to cover one of those companies in a specific video, let me know down in the comments below. Let me know if you actually opened some positions in the last couple of days, or if you're actually watching some other stocks in the month of September. Let me know down in the comments below. And that will be it for this video. If you liked it, consider leaving a thumbs up. And if you haven't subscribed yet to this channel, we're on our way to 4,000 subscribers. So hit that subscribe button and help me reach that goal. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.